Hello friends, this is Raj Sastri from Raj Option Trading. Today I want to talk about buying stocks on a pullback. So we have pullbacks at times, so that's the best time to buy some of these favorite stocks. With that, today is April 27th, 2021. So here are some images from the favorite stocks. First is Digital Turbine, ticker symbol APPS. Then we got Grow Generation, GRWG, and then we got Pinterest, PINS. So with that, let's go into a little more details and look at the stocks which have pulled back in last 10 days and see if there's an opportunity to buy some of those. So with that, here we got a list of 20 stocks. These have pulled back pretty hard for last 10 days, as you can see here. And the way this is organized is I got all the stocks here, 20 stocks, and they're organized by pullback on a 2-week basis or a 10-day basis. The one on the top has pulled back the most in last 2 weeks, which is 33%, and then it's on a ascending order, as you can see. So with that, let's look at a couple of these and take it from there. First is Marathon uh, Digital. So this is a Bitcoin mining play. As you can see, very good sales growth, but it's off of a lower base, $4 million. But gross margin is negative, as you can see. There is a lot of float here, short interest, and if from a valuation perspective, price to sales perspective, this is an expensive stock. But stock has pulled very hard, 33% for last week. But if you look at 1 year performance, it's 7,159. Very good 1 year performance. So what I typically do for these type of stocks, if it pulls back so hard, I would buy a little bit and keep it for a while. So that way, you don't buy a lot at once. But if it pulls back hard like it has done now, you would pull back. You'd buy some. And if you look at the 1 week here, there is improvement. 2 weeks it's pulled back hard. 1 week it's showing some progress. That means it's a little bit consolidated. Now it's trying to make its way up, which is a good sign. Then we got Silvergate. Again, it's a Bitcoin play. And I think it's a good stock. I've been buying this, whenever it comes down. So same story here. Stock has fallen down 32% here. It's all, because Bitcoin is kind of losing its, at least last 2 weeks or so, it's losing its value. That's why all the Bitcoin related stocks, they're coming down. So with that, if you look at this 2 weeks down 32%, but in here looks like 1 week also it lost some value. So you could buy slowly and take it from there. Then we got Riot blockchain. It's in the same category, and this has lost 31% in last 2 weeks, and they have gained some in 1 week. So that's a good sign. At least they're showing some sign of stabilization. But on a valuation perspective, as you can see here, high valuation, and both Riot blockchain and Marathon Digital both have high short ratio. All of these stocks have done nicely for 1 year, as you can see here. Then we got Fortuna Silver. These guys bought another mining company, and they came down pretty hard. Normally, this happens during the acquisition because this is an acquirer. That's why stock dropped pretty hard for 2 weeks and also 1 week. I would expect this to kind of stabilize, and I think it's a good time to buy some and take it from there. Nice, 1 year performance. And then you got Peloton. Peloton, as you can see here, it dropped 16% in last 2 weeks, and in 1 week it's dropped 3.90. I would buy slowly. No rush with this. Buy slowly and accumulate as you go forward. The company has got very good community, and a lot of people are really buying the Peloton equipments. Even though people are afraid of reopening, I think some of these old habits, they will stay back. People will be used to Peloton bikes. So with that, now I will be buying this on any pullback. And next is one of my favorites. It's apps, Digital Turbine. And these guys really help with any OEMs and device makers to reach their target audience. With that, this stock has pulled back 15% in 2 weeks. And as you can see here, they have gained 7.50% in last 1 week. That shows some sign of strength. They're kind of stabilizing, and they want to come back and at least show some progress from a stock price, which is a good sign. And very nice 1 year performance, 1268. That's a huge performance here. And the list goes on. Here we got Amkor, Grow Generation, Overstock. These are all my favorite stocks here. I would buy them on the pullback. And Cadence is one of those very good stocks. This stock has been doing nicely of late, and now it's pulled back a little bit. I think these are good opportunities, and some of these are earnings plays. Netflix announced the earnings, stock pulled back. I think it's also a good time to buy some Netflix. They have not done too much for 1 year, 19%, but I think it's a good stock. It could be a good time to buy. I think they had some subscriber flat to down subscriber growth. That's why stock came down pretty hard. Then we got Tesla, same story. I think they did a good earnings, but stock has pulled back. I think Tesla, anytime it hits around 700 or below, it's a good time to buy some and keep it for long term. Pinterest, same story. They announced the earnings, stock pulled back. I think even after hours, it's pulled back more. I think this is a good one. Whenever there's a pullback, it's good to buy some and keep it for long term. Blink charging, huge price to sales ratio here. Valuation perspective, it's a little expensive, but I think there is some future for charging, EV charging. I would buy this on any pullback and take it from there. And then we got First Majestic, same story. Silver, I think with the Fortuna silver dropping a little bit, even First Majestic also dropped. I think it's a good time to buy some. And as you can see here, 1 year, very nice 103.40 performance. Then we got a couple more here. I will not go through them in detail, but you get the drill. So if you see 2 weeks, stock has dropped pretty hardly, but now it's showing some progress. Then it's a good time to buy some and take it from there. And if I had to pick one or two here, I like stocks like Envit, Envite, and also IIVI. Synopsis is also one of my favorites. So I think you can be choosy here. Don't need to buy all of them at once, but buy a little bit at a time. And Vuzix, I think this also has a high short ratio. Stock has pulled back, but it's bounced back again. This stock here, it's very bounces up and down. So whenever it pulls back, it's good time to buy. So with that, let's go into few stocks in a little more detail and see if it's a good opportunity to buy. So first one is Marathon Digital. As you can see here from the chart, they had an earning here, flat, earning, one more earning. Stock is again flat, one more flat. But after this earning, I think they took off, as you can see here. And they had one more earning here. Stock came down before the earning, went up. Now stock came down before the earnings. You could depending on how it goes, there is a high chance stock may go higher. The reason is, as you can see here from a RSI perspective, RSI is trying to go up. As you can see, on the balance volume is going up. There is a good chance this can bounce off of lower Bollinger Band and go towards the mid band here. With that, earnings is around the corner. As you can see here, 513. It's 2 weeks or so from now, so you got to be a little bit careful around the earnings. But there's a chance it can bounce back from this depressed level into at least mid band here. So with that, I think there is they're appointing a new CEO. That's a good news. And they're also participating in the cryptocurrency, blockchain, fintech conference. At least they're showing some new good news here, which is good. And from a stock perspective, earnings per share, I think they had been losing a lot of money in the past. Now they're kind of stabilizing. That's a good sign. There is a progress from an earnings per share perspective. Still, it's negative, but it's very much manageable at this point. From a sales perspective, I think they had a huge sales. Probably it's pre-IPO or just during the IPO. But now there is some improvement in the sales, as you can see here. 1.60, 1.20, 4.40. There's some improvement here. But on the negative side, the shares outstanding ballooned in 2020. Whenever we dilute the share outstanding count, that's when stock can take some hit. I think this could be one of the reason. We have a lot of stocks available, more supply, so that's why stock is not going up too drastically. So with that, from a fundamental perspective, company sales growth, nice sales growth, as you can see here, 1 year 181%, quarter over quarter 854%, but it's off of a lower base. It's $4 million is the revenue, so the numbers will look much bigger because we are comparing with the low revenue number. Gross margin is negative, high short interest here, high valuation, dropped so much in 2 weeks, now bouncing back a little bit. Nice 1 year performance, and it's 40% down from 52-week high. So that's why you're not paying too much, even though valuation is high, it's off 52-week high. And from a margins perspective, still not making money, minus 205.70 operating margin. From a margin perspective, it's still losing money big time. And from an earnings per share perspective, it's losing 13 cents per share at this point. And share count, I think right now shares available is 98 million. So I think probably it went up from this number here. And they got good amount of cash. Company not going to go out of business. They got 144 million cash and no debt, which is a good sign. Looks like insiders are selling. That's the reason for share count outstanding going up probably. And institutions are buying. It's a good sign, but it's lower percentage, as you can see here. Low IV percentile. So if you want to buy call options, it's a good time because IV percentile is low. Put call ratio is low. That means there are more calls traded than puts. That's a bullish sign. People are thinking this stock will go up. The option buyers are betting this stock will go up. And they got nice volume when it comes to 3-month average volume and even current volume. It's very, very good volume. It's a liquid stock. Earnings is around the corner. So with this, it's a good situation here. I would buy the stock whenever it comes down. Don't buy too much. Buy a little bit at a time and take it from there. Next is apps, digital turbine. As you can see here, stock has done nicely. I love this chart. Earnings, stock went up. One more earning, stock went up. Earning went up. You can see the pattern here. Every time they do the earnings announcement, stock kind of goes up. And nice looking chart here. No big drastic improvements or shifts here. But as you can see, off late after the last earnings, stock is kind of trading sideways to a little bit lower, if you could see here. But I think overall, as you can see here, the RSI itself is a little bit lower at this point, 46, trying to make its way higher. On the balance, volume is pretty steady. I think because stock is coming, a little bit. Down, I think there's a chance that this can bounce back. It can bounce off of the mid band of this Bollinger Band and then go higher. So with that, it looks like people are wondering. Insider Monkey, they're thinking, is it a buy or a sell? And Barron's.com is thinking there's a good promise here. I think it's really good sign here. And Market Watch, they're kind of thinking this probably tech stock can build momentum here. So I think overall the stock has beaten down. There's a good chance, it's trying to go to the middle band so it can go higher. So with that, from a earnings per share perspective, this is a great story. Stock has been losing money in the past from earnings per share. Now they're positive EPS, which is good. Companies earning money, which is always good. From a sales perspective, I love this sales clip. They've been improving nicely, nice sales acceleration year over year. That's what we would like to see in a company. On its shares outstanding, it's little steady improvements. I think the insiders will keep selling once in a while, which is understandable. But with the sales growth, the top line growing nicely, little bit dilution is okay, manageable, not a big deal. So with that, from a fundamental perspective, company stock is around $75. Nice sales growth. I love this sales growth here. 85% for 1 year, 146% quarter over quarter. Nice gross margin. I love this. And they got nice institutional ownership also. In a 2 weeks time frame, stock dropped 15%, but in 1 week time frame, they're recovering, which is a good sign. And they've done nicely for the year, and they're off 26% from 52-week high. I think this stock, whenever it comes down, it's always good to buy. And from a the number perspective here, nice margins. I love this margin. They're making money, 15% net margin. From a price to earning perspective, it's a little bit expensive from a valuation perspective here. But from a price to sales perspective, it's not expensive. So for these type of SaaS companies, I look at price to sales, not price to earning, because price to earning is still really not too much meaningful for these high growth companies. That's why probably we should look at the price to sales ratio. So with that nice cash here, they got a lot of cash. Debt is manageable, not too much. Insiders are selling, which is which is the case with these high growth stocks, and institutions are buying, but quantity is low. IV percentile is low at this point. Even if you want to buy call option, which may be okay, it's a low IV. You're not paying too much. Put call ratio is very low, meaning there are more folks betting in the option market that this stock will go up. And nice volume. It's a liquid stock. There's a huge volume, 3 million in last 3 months, and 1 million in today's volume. And earnings is, I think probably they announced the earnings. It's coming up later, 6/1, which is a month or so from now. So I think with that, it's good to either buy the stock outright, or you could even buy some call options. Either way, it's less expensive because IV percentile is low. So with that, next is growth generation, GRWG, and this stock has done very nicely. I think with the cannabis stocks doing well in the past, this has kind of rode that cannabis growth. So with that, I think earnings stock went up. One more earnings stock went up. Last earning here, I think stock came down a little bit. Now it's kind of in a channel, as you can see here. So at this point, it's trying to take the middle band here. If it takes a middle band, it can go nicely, bounce off of middle band, make the middle band as a support. So with that, RSI is trying to go higher at this point. As you can see, it's slowly making its way up, and on the balance volume is kind of flat, which is good. It's on the higher side. And I think Investopedia thinks this is one of the top marijuana stock, and they participate. They prepare to enter Mississippi medical cannabis market, which is good. They're expanding, and from a earnings per share perspective, I love this. They're kind of making money now, 12 cents per share, which is good. And sales, I love this sales clip. Very nice sales clip. You know, good thing with grow generation is they're a picks and shovel play. All these cannabis players, they need grow generation because these guys can really help with the picks and shovels. Nice sales acceleration. I love this. Shares outstanding is growing, as you can see here. That's mainly because insiders are selling, as you can see here, and institutions are buying a little bit slowly. That's the reason for our shares outstanding to grow. But if the top line is growing nicely, little bit dilution is okay. So with that, if you look at fundamentals here, $45 stock, not expensive at all. Nice sales growth, 94% for 1 year, 144% quarter over quarter. Nice gross margin. Institutions are owning this stock, which is good, and nice 1 year growth. I love this performance here, and they're 33% off of 52-week high. And if you look at margin perspective, nice margin here. They're making money, which is good. And earnings per share perspective, it's pricey. But if you look at price to sales, it's not pricey, which is manageable, which is good. And they got good amount of cash and low debt, which is always good. We love to see low debt. Company not levered from a cash perspective. Insider are selling, institutions are buying a little bit. IV percentile is a little bit higher, 43 or so. Probably, I would not probably buy call option. If you want to buy stock, it's okay. But, maybe it's not a good time to buy, call option because IV percentile is a little bit high. I love to see a little bit low, maybe say 30, 35. 43 is okay, but a little bit higher. Put call ratio indicates there are a lot of folks in the options market betting that the stock will go higher, which is good sign. And earnings is around the corner, 513. With that, I think grow generation is a good stock. You could buy some on this pullback and take it from there. So next is Pinterest. Pinterest, I think stock has done very nicely. The CEO is really doing a great job. And last couple months, I think stock came down, went up, came down. Now it's trying to take the middle band of Bollinger, as you can see. Stock had a earnings, today. I think after hours, stock has dropped a lot. 10% drop in the late trading. I think this could be a good one to buy, maybe tomorrow or day after, just to see, once it drops 10, as it stabilizes, it's good to buy some and keep it for long term. And from a earnings per share perspective, I think they have done nicely. It dropped in 2019, but picked back up in 2021, 2020, which is good. Nice sales acceleration. I love this sales acceleration, which is very steady eddy. And shares outstanding, I think it's not too much. It's manageable. I think it's went down in 2019, went a little bit higher in 2020, but not a big deal. From a fundamental perspective, I think they've done nicely from a 1 year revenue growth, quarter over quarter revenue growth, very good gross margin. This is like any software company type gross margin, which is good. It's a social media company, nice institutional ownership, and they dropped 7.5% in last 2 weeks. I think tomorrow they're going to drop maybe 10% or so, which is good to buy. And they've done nicely for 1 year, 276% growth, and they are just 13% off of 52-week high. From a margin perspective, the company is still not making money. It's a negative net margin. Earnings per share is also negative at this point. They have a lot of cash, as you can see here. Some debt, which is very much manageable. Insiders are selling it. Understandable, stock has been bouncing nicely. I think insiders will typically sell as the stock does nicely. Institutions are buying, a little bit slowly. IV percentile is low. I'm thinking it will be even low tomorrow after the earnings. I think it's good to buy, because it's a low IV percentile. But it could be even better to buy stock outright if you can do it. Otherwise, you could even buy Delta 70 or higher call option 3 months out or so. Put call ratio is very low, indicating a lot of people in the options market are betting the stock will go higher. Nice volume. It's a liquid stock, and earnings was today. Next, we look at Overstock. As you can see here, Overstock, it's got its moments. It does nicely, crashes down, does nicely, crashes down. Now it's trying to go up slowly. And as you can see here, Bollinger Band is kind of contracted at this point, which indicates stock can take the higher band if it does well. And from a RSI perspective, RSI wants to go up at this point, which is good. On the balance, volume is pretty steady. And from a earnings per share, I think they turned profit 1.25, earnings per share, which is good. From a sales perspective, I think they've done nicely. They've done very nicely in 2020 and pretty steady, I would say. Shares outstanding is growing pretty slowly, which is okay, understandable. Nothing alarming here. From a fundamental perspective, I think they've done nicely for 1 year, nicely for quarter over quarter, good gross margin. Institutional ownership is also good. And 2 weeks they dropped by 9%, and they've done nicely for 1 year, 600%, and they're 45% off of 52-week high. I think this is a good one to buy because this company is really not afraid to go into new areas. It was a old style apparel play. They got into internet. They got into furniture business. They're into crypto. They're always reinventing themselves. So with that, they got looks like they got some positive margin here as of now, which is good. And right now they're also earnings per share positive. They're making money as of now, which is very good. And they got good cash and very low debt. They're not going to run out of cash. Insiders are selling, institutions are buying a little bit slowly. IV percentile is very low, 25%. So even if you want to buy call option, you could do that. But typically, if the stock is trading like this, it's you got to wait a little bit. But if you are buying a stock itself, you can wait longer. But options, I think if you want to buy 3 months or more out, then you could do it. Otherwise, if you shorter term, you might lose your time decay might eat into the value. So make sure you buy longer term call option, mainly because stock has been trading a little bit sideways of late. That's why earnings is coming like 2 days from now, 29th. So you got to be watching out around earnings because normally, as you can see here, traded widely down. I'm hoping by looking at the chart, there is a chance it'll go up, but because earnings is 2 days out, you got to be careful with the stock. And because IV percentile is low, you could even do things like you could even buy a strangle or a straddle if you want to play both ways. That's another good way because IV percentile is low. You could buy things like strangle and straddle too. Next, let's look at NVT. This is again a steady eddy type stock. Off late, it's been trading sideways, as you can see here, to down. Now it's trying to take its middle band in the Bollinger Band, which is a good sign. And as you can see here, earnings stock went up, earnings stock came down, earnings stock came down. Now it's trying to go up a little bit, as you can see here. I think there's a chance this can do well off these depressed levels. Earnings is coming 5-4 couple days from now, which is a good story. Looks like they're opening some new facility to support continued growth. They're also joining some corporation here. Joining some PR. They're doing some genomic profiling, which is good news. And from earnings per share, I think company is still losing money. They might be investing pretty much into their product development. That's why you can see here earnings per share is really negative and going the wrong direction here, but the sales is going right direction. So top line is growing nicely. That's what we would like to see. Shares outstanding is also growing. So I think companies really, insiders are selling, as you can see here. I think which is okay as long as the company is making money. This can be manageable. And from fundamental perspective, I think nice sales growth here. 1 year 16%, quarter over quarter 51%. Nice gross margin. Institutions are owning a lot, which is good. Short interest is high. This is why if the stock does well in the earnings, these shorts will get squeezed, and this can take its higher band in the Bollinger Band. And from a margin perspective, it's negative. They're not making money at this point, losing $4.47 per share. They got cash but high debt, as you can see here. So typically, I would like to watch out when companies have got high debt. So I think this is something to watch out. But stock is at a depressed level, which is okay, I would think. But I would watch this carefully. Um, and IV percentile is low. You could even buy a call option at this point. IV is low. Typically before earnings, this IV percentile goes up, but now here it's low. Put call ratio is low. That means a lot of people are betting this stock will go up in the option market. It's a liquid stock, a lot of volume, as you can see here. So with that, I kind of recommend Envite, even though a little bit higher debt to my liking, but I think it's okay longer term. With that, thank you very much. Happy trading and investing.